But at the end of the day, like you guys have said time and time again, it's just a math game. If the numbers work, the numbers work, right? So that's kind of what I'm just out there looking for.
Hey, Rent to Retires, it's Adam Schrader here with another episode. And one of the things when Zach and I were talking about how can we make the podcast better in 2023, let's talk with investors themselves, get them on the show, tell their stories about how they got started, what they're doing, and just kind of show people that you don't have to be, getting 100 units in one fell swoop to be successful. So we invited Richard on the show to talk about what he's been doing. So Richard, thanks for joining us.
No, thanks, Adam. It's good to talk to you again. Always a pleasure.
Yeah, it's an absolute pleasure to see you live here. I know we've talked on the phone a few times, and just tell people a little bit about you, like kind of in general, what do you do? And then we'll dive into your real estate stuff later. But just so people see, you are a real person who has a real job. So tell us a little bit about yourself?
Yeah, no, absolutely. So I guess I'll start with that. I'm a U.S. citizen, born and raised in Denver, Colorado. But I pretty much since about 2016 have lived abroad. I spent some time in London. I'm currently living in Singapore, and I'm a real person, and I have a job. I kind of work for myself now. I've always been in kind of the capital markets, investment banking industry up until the end of 2021. And at that point, I did decide to kind of pursue real estate investing almost full time. And you might ask, well, how are you doing that from Singapore, from the other side of the world? And that's where Rent to Retirement comes in. And you, Adam, and you've been really, really helpful there.
Yeah. So you started, before you came to us, you had your own investment properties. Tell us a little bit about kind of what got you into the investing world and kind of how you found your properties there.
Yeah, absolutely. So I guess, we'll start from the beginning, born and raised in Denver and, middle-class family, and, kind of, from day one had really kind of followed the path that, society had set out for, most of us is, go to school, get a job, buy a house, get married, that kind of thing. And so that's really the path that I started down, and it was great. And so, after going to school, I moved to Denver, started an investment banking job. And then, once I saved up enough money, I was able to, purchase my first condo. So I had a 3-bed, 2-bath condo in Denver. And, that was great. I had ticked off, something that, society says I should do. And, we were off to the races. But, shortly after that, I had spent 4 years kind of in the banking world and decided that was a long time in the banking world. So decided to do something wild and crazy with life, just for some life experience, and actually moved to Thailand. So I moved to the opposite side of the world, and I taught English for a year. And the reason I say that is because, I still had my condo.
Banking.
Yeah, exactly. But I still had my condo. And so that was kind of my first entry into the investment side of the world, because it had just been a primary residence up until that point. And so, I just found a group of friends that wanted to rent it from me. And that was kind of the aha moment. I had my expenses, my mortgage, insurance and taxes, but I was able to rent it out for, a number greater than that. And I said, okay, we're on to something here. And then, when I finally returned from Thailand, I decided to actually, let's keep that as an investment property. And then that's kind of when the snowball effect started. So, I bought another condo and then lived in that for a little bit of time. And then same thing. So work actually sent me out to London. So the same thing, I rented it out, and I had moved to London. And then, the Denver market had been quite booming, if you will, in kind of like 2014 up until, 2018, 2020. And so actually, the units that I bought, the equity build was pretty significant. I mean, the increase in value was quite dramatic. And so that's when I kind of said, okay, well, there's got to be something to this real estate thing. And so that's when I started kind of going down the path of, the podcast, like yourself, Bigger Pockets, started reading, Rich Dad, Poor Dad, all these things that you kind of hear time and time again. And then, I was actually able to do a cash out refi on that first property. And I had enough equity to buy 2 more properties in Colorado. So then I kind of branched out to the single family world and bought 2 single family homes there. And doing this all abroad. And then, after that, it was great, got them operational, tenanted, but it was a lot of work, especially, being on the other side of the world. And then that kind of coincided with, going down the rabbit hole of these podcasts, and I was actually listening to, I believe it was the Rookie Real Estate Show, by Bigger Pockets, and Rent to Retirement had actually advertised on that. And I said, that is quite interesting. A turnkey provider that can essentially do all the work for you, vet the properties, vet the, locate, markets, and really kind of just provide a turnkey investment. And that's when I said, this is awesome. Got on the phone, and that's when I spoke with you.
Yeah. So one of the things that, that's fantastic to hear. I'm really happy you did, and I'm happy to hear that it's going well. Whenever you had your second condo and you moved to London, did you rent that to friends as well? Or was that your first time where you kind of found external people?
That was external. Yeah. So just went through, I think it was actually Craigslist, and found people, but again, did it all on my own, vetted them, background checks, credit checks, employment checks, all of that kind of thing. And went through that whole entire process, which was great. I like kind of the personal aspect of finding the tenants as well. But yeah, that was pretty smooth and easy.
Now, how did you manage it while you were, actually, if something did, were there any maintenance issues, and how did you handle those?
Yeah, so I would say that I'm cheating a little bit. So my parents live in Colorado, and they're both retired. And so whenever something needs to be done, and physically they need to be there, then I can just call my parents up. So everything that can be done remotely, I do, including collecting rent checks, all kind of the finances, the numbers, mortgage payments, all that kind of stuff is pretty automatic now. But other than that, yeah, we have had a couple issues with kind of the air con, with a leak in the shower from above, and these kind of things. So they do happen, but I had my parents right there, and it helps that they're so close.
Nice, yeah, that's definitely free property managers.
Yeah, it helps with the margins a bit.
Absolutely, and you need that in Colorado and in certain places, which is why we don't end up investing in those places a lot. But I'm glad to hear that your primaries were able to turn into solid investment properties there. A little bit, you mentioned, and this is something probably not a lot of our listeners are going to do, which is the self-managing part that you're doing. Talk a little bit about the whole vetting process for tenants. Like, what are you looking for, or what were you looking for? I'm assuming you're still self-managing these, right? So
yeah.
How do you go about vetting tenants and finding the right ones?
Yeah, no, it's a good question. And I think I've gotten quite lucky. So since I've owned all of these, I still have the same tenants in all of them.
So you did a good job.
So apparently they're doing something right. Yeah, but to be honest, I went down just kind of, Facebook Marketplace, Craigslist, and then actually used Zillow as well. And I think, when I look at these tenants, it's really, I like to get on the phone with them. And first of all, it's just, a casual conversation. And I think you can get a lot of information about just how good of a person someone is just by having a chat with them, kind of understanding their story, whether they're a family, whether they're a group of friends, or whatever it may be. So really it's kind of that gut check sense, first of all. And then once that kind of, once I tick that box, then it's kind of the standard stuff that you would expect, doing the background checks, employment verification. And then I also like to get a referral as well from, someone that they've rented from before. And other than that, that's it. And, it's all worked out quite nicely. And everyone has, has kind of renewed their leases time and time again. And I think I've gotten quite lucky.
So what's your stance on rental increases? Are you a yearly raiser, or are you kind of just sitting on the same rent for years now?
Yeah, so it's a good question. I've kind of gone back and forth, and I've done different things with different properties. But I think what I'm settling on now is rent increases every 2 years, just because that's kind of what I've been doing. And the tenants are happy. I'm happy. I'm able to continue to increase ahead of my costs, and that just seems to be working well. I think you can get a little bit of anxiety as a tenant, just kind of expecting a rent increase every year. And so, it's kind of a breath of fresh air when it's like, hey, no rent increase this year, like happy days, you're happy, I'm happy, let's continue this. But always kind of about setting expectations that, yes, well, this is what's going on in the market. So, you're lucky now, but there should be some kind of expectation that there will be, an increase in the future, of course, if it's warranted and the market stays there.
Yeah. So are you having them sign a 2-year lease, or you just, when you renew, you're saying, hey, we're not increasing?
Yeah, no, it's all 1-year leases. And this is just kind of a verbal agreement. I think, I've become pretty close with my tenants. And so there's a bit of a trust factor there.
Yeah, fantastic. So now you've gone from those, and now you're into the turnkey space, as we discussed. Yep. Talk a little bit about the differences that you've experienced between, getting your own places and sourcing them yourself and managing them yourselves, as opposed to, you've been buying new construction stuff with through us. A little bit more about that experience with the property management and kind of how those have gone.
Yeah, no, absolutely. And so, again, a little bit of a new sphere for me to kind of to move into, but it's been a blessing, I would say. Everything that I was doing, I'm very confident with the Colorado markets, but others outside of Colorado, I don't really know the markets that well. And so when you have someone like Rent to Retirement who's already vetted the markets, it's great. It makes things a lot easier, right? And so once you kind of have the validation on the market side, then it's kind of like, okay, let's take a look at what the inventory is, what kind of homes are available. And I'd say, the homes that I've, have purchased through Rent to Retirement or, with your guys' help have been all new builds. So relatively, yeah, I mean, one of them was finished in November and, in operation now in Memphis, and then 5 in kind of Cape Coral in Florida. And those are kind of working through the construction phase. But yeah, I think really the summary is that you guys make things pretty easy for us. And happen to be living abroad, it makes things just a lot easier. And so I guess, just when I think about my Memphis house, it was just very simple. It was pretty much just send money here. You guys vetted the property, vetted the property management company, and they were super nice. And it's just kind of this community of make things easy for the investor, and I really appreciate that. And while things are still kind of ongoing in the Florida sphere, I think one thing that I've learned through this process is, of course, when you're dealing with third parties, whether it be builders or whether it may be the city or the Department of Health or whoever it may be, there's always going to be things that kind of move away from kind of your original expectations, delays, cost overruns, supply chain issues, these kind of things. But to be honest with you guys there, kind of overseeing and kind of advising on the whole entire process, that just gives a lot of comfort that, things are going to get done. And at the end of the day, it's going to work out just fine.
Okay. 1 second. I'm going to plug in my laptop real quick because my internet connection seems to be just a little faulty. So I'm going to make a note to change this, but let me just hardwire in for a second.
Yeah, no worries.
All right. So, all right, there we go. Let's see if that helps.
Yeah.
So when it comes to your future investing, kind of what is your, you mentioned you stepped back and you're trying to do this full time now. How is that, it sounds like basically with 4 properties, now 5, probably doing some like freelance work on the side, or how close are you to achieving your goal that you set for yourself?
Yeah, that's a good question. And so I think when I think about kind of my future with real estate, I mean, every single day I'm looking at, the emails that you guys send. I'm vetting kind of, what's on Zillow in Colorado, and, starting to look at some other markets. And so really the idea is to get to that point of financial freedom, where, the passive income basically just covers all your expenses. I'm not there yet, but well on my way, thanks to you guys as well. I think the Florida properties are going to be, kind of a game changer to get a little bit closer to that level. And you're right. So I do a bit of freelance stuff. Like I mentioned, I was kind of in the banking world doing kind of currency and interest rate trading. So I do a little bit of that for myself just to pay the bills. But right now it's moving into a little bit more, maybe identifying some value add opportunities. So have started to look at some duplexes, some quadplexes that, are a little bit older that could use a little bit of renovation and rehab, and essentially kind of looking at doing the BRRRR method. I think everyone knows what that is. So that's kind of where I see myself now. It's a long game. And right now is an interesting and kind of a dynamic market, if you would say. No one really knows what's going on. You've got, a lot of different factors from all angles. So, but at the end of the day, like you guys have said time and time again, it's just a math game. If the numbers work, the numbers work, right? So that's kind of what I'm just out there looking for.
Yeah. Now, you have an experience that a lot of our investors don't, and that is you've actually bought and closed the property while not living in the U.S., which is, we deal with a lot of expats, and they're very concerned that oh, I get paid in this other currency, and I don't live in the US, so how on earth am I going to actually close? Can you talk us through a little bit of your experience, going under contract and fulfilling the whole thing while not in the US?
Yeah. So two comments on this. So because I have stopped kind of working in the employment world, I don't have what we call W-2 income, or employment income if you're abroad. So I have had to look at financing options just a little bit different. And I think you guys have covered some of this before on previous shows. So for the Memphis property, I utilized a DSCR loan, a debt service coverage ratio loan, where essentially they underwrite the property as opposed to me. So they're not looking at my income. So that was kind of step one in this new world of living abroad and not having employment income. But that was actually quite easy. I think there's quite a few lenders out there that realize they need to be a little bit more flexible just to compete. And so there are a number of lenders out there that can be pretty competitive on rates. I think if I had been employed and this was a primary residence, I think I would have gotten about a 5% 30-year fixed, but the DSCR came in at about 6.5. So they're a little bit more expensive, but they do provide some flexibility. And then the second point is when you are abroad. So everything is very straightforward with kind of the buy and sell contract. Everything is done electronically via DocuSign, et cetera, et cetera. However, with the loan, these do need to be notarized. And so usually you just kind of walk to the title company's office and get all of that done. However, being abroad, usually the lenders require you to actually go to the U.S. Embassy and get the loan agreement signed there. And there is a little bit of additional cost there, but other than that, it's pretty straightforward. And yeah, those are kind of the two biggest things that I could say were different. But other than that, it's really just kind of just trusting in the process, trusting in the community that you're working with, the seller, yourselves as kind of an advisor, and everything's been great so far.
Yeah, I do remember there were some emails going back and forth because you were like, guys, this is when my appointment is at the embassy. And if we don't make this appointment, the next one's like 2 weeks out. It sounded like scheduling with the embassy might have been a bit of a interesting times.
It can be tricky, and sometimes, I mean, the opening spots for kind of the notary services at the embassies can be, not for 3 weeks, 4 weeks kind of thing. So that's why I was like, all right, guys, this is our hard deadline. But again, everyone came to and made it right at the end, and we made it happen. So again, thanks, Adam.
Yeah, absolutely. So what are your, you mentioned kind of doing potential burrs. Are you looking at staying in the Colorado, Memphis, and Florida areas? Are you looking at branching out? And what do you see for yourself in the future?
Yeah, definitely. So I think in terms of markets that I'll focus on, it's probably going to be Colorado and Florida. Colorado, just because I grew up there, I know the market pretty well. My parents are there, so the margins are a little bit better without a property manager. But I really, really have high hopes for Florida, and it's a very simple investment thesis. I mean, everyone's leaving California, everyone's leaving New York, and they're either going to Florida or Texas, where you are. And so, time after time, you listen to all the professional investors, and there's quite an opportunity in Florida. So I'm sure we'll continue to do business together as long as I'm living abroad and there's opportunity in Florida. So that's where I'm focusing.
Yeah. Now, is your plan when it comes to kind of growing and supplementing or replacing your income? Sorry, are you going to keep leveraging yourself? Or are you looking to pay these off over time? Kind of what is your financial strategy with these properties?
Yeah, so it's a good question. So with the 4 properties in Colorado, luckily I was able to lock in 30-year debt below 3%. Well, at and below 3%. So I think I would be crazy to pay those off. So those will kind of just sit where they are. But this is a long game. I'm relatively young. 34 years old, so I've got quite a bit of time. And so. Yeah, you hit the nail on the head. It's kind of, leverage, and just continue doing exactly what I've been doing. And over time, the returns are going to be there, which is going to be, better than, paying off a 3% loan. But at some point, I think there will be that moment where it's kind of like, okay, well, if all these properties are paid off, I'm very happy with that level of passive income, but not quite there yet. So I think for the time being, we're going to leverage, continue to scale. But then at some point we will look to, kind of just slow down and live off that passive income.
Yeah. Well, your statement there about your your Colorado properties is what gives me a lot of confidence about appreciation later. Is there's a lot of people sitting on 3%
Yep.
interest rates who are going to be very hesitant to sell, and that's going to lead to an even bigger inventory issue than we had pre-COVID and during COVID. So it's yeah, it's going to be something that's good for real estate investors long term. Maybe not so much for the homeowners or the home buyers who want to live there for primaries.
Yeah,
Because yeah,
I couldn't agree more. Yeah, I think you hit the nail on the head.
when you go to refinance, you're going to have to get over yourself and be like, man, my interest rate's almost going to double.
Yeah,
Yeah. Yeah, it really is. Yeah.
Yeah.
So do you have a financial freedom date that you're wanting to get to, or is it just kind of when you get there, you get there?
I think it's when I get there, or when I get there. I don't have a hard date because this is quite fun. I like doing it. Real estate's amazing. I'm a bit of a deal junkie. I like closing, like finding the property, closing. When you guys kind of serve up these properties on a plate for us, it makes it easier, and it's wonderful. So. I think, there's no date in mind. There's a bit of a number in mind, but that's always kind of changing, as life changes and, that kind of thing. So we will see. It's a fluid situation. We'll see.
Absolutely, completely understand. So we always like to kind of end with a general kind of rapid fire question. So I'll get started with these. So let's get into our rapid fires here. So we talked about the first one, but tell us when was your first deal? So obviously it was in Colorado. It was your primary condo. When did that start?
Yeah.
When did you turn it into the investment property?
So that would have been 2014 when it was turned into the investment property. Yep.
All right. And what made you comfortable starting to invest outside your home market? Like when did you realize, Colorado isn't just the only place, let's move out? What made you comfortable doing that?
I think, to be honest, what made me comfortable, I guess, first of all, what made me interested is just going down the rabbit hole of all the podcasts and just understanding that, some of the, smartest investors out there, they don't just stay in their own market. They look around because every market is different and there's going to be opportunity, everywhere, not everywhere, but, there's opportunity outside your own market. But and then in terms of, when I decided to do that, it was just you guys provided a lot of comfort, and just kind of client testimonials, listening to, Rent to Retirement and some of the other turnkey providers, and just realizing that, it's not this big scary world to invest across the state line. And, everyone's kind of, in the, on your team in terms of the property manager, in terms of, the providers like yourself, and everyone wants you to win. And at the end of the day, that's really what's been happening. So again, very comfortable investing out of state.
So what are your highest and lowest interest rates that you currently have on your properties?
Yeah, so the highest is 6.5%, the one that I just mentioned. We will see what we get on the Florida properties. Those will probably, I guess we're going to go through a hard money stage of construction. So that's going to be the highest, which I think they're quoting 12.5% now. But when it comes to kind of refinancing those into longer term debt, we'll see where the market is, kind of between now and the end of the year. But the lowest is 2.675.
Wow, nice. And how long did you research real estate before you took the plunge of investing?
So like I mentioned, so the first one wasn't really an investment.
Yeah, we're going to go with the first real investment property you bought.
So I guess there's kind of two phases to this. The research in terms of just education, and then the research into the actual property. And so the education part was quite a while. I'd say, 6 months of really listening to like every single podcast I could, reading all the books, and just kind of, diving in deep into really understanding what I'm getting myself into. And then from there, once I started looking, it was actually pretty quick. I'd identified a property that was, right in my kind of target market, right in my target range. And, if you don't take action, nothing happens. So went into it pretty quick.
Yeah. This is the question I'm pretty sure I know the answer to. Do you wish you'd done it sooner?
The best time to buy real estate is always 10 years ago, right? So yes, absolutely.
And how are you achieving your goal? Are you just dumping everything into real estate, or are you just kind of setting it aside? I mean, I assume based on what you said with your strategy, you're just all in, any savings is going towards real estate and continuing to buy? That's
right. Yeah. So if I think of kind of the investments that I've made over time, of course, to have dabbled in the stock market and crypto and, all of this stuff that, it's great until it's not so great. And it's great until it's not so great. And the one thing that has been consistent and just, good for stress levels and just general like happiness with life has been real estate. And so I think given where I am right now in my journey and kind of the time frame that I have, pretty much dumping all of it into real estate.
You mentioned in your 6 months or so of researching real estate that you listened to books, you listened to podcasts and read books. Was there any particular book? Obviously, our podcast was the one that did it. Were there any particular books that you would recommend to people other than Rich Dad, Poor Dad, the Purple Bible, as they call it?
The Purple Bible, yeah, that's the number one. But another book that really kind of changed my perspective on things is Loopholes of Real Estate by Garrett Sutton.
Okay, nice. Yeah, he's a lawyer, right? Asset management type person. Yeah, we've interviewed him before. He's a good guy. So Loopholes of Real Estate. All right. Well, we'll put a link to that in the show notes. Let me just make a note here. Link to that in the show notes. So, Richard, anything else you want to leave our listeners with before we wrap it up today?
No, I think we hit most of it. I would say that I'm quite grateful that I stumbled upon rent to retirement and these books and kind of have gone down this real estate wormhole, if you want to call it. And so I've actually kind of decided to try to give back in my own way. So I did create an Instagram account called traveling.property.investor, and that traveling is with 2 L's because my phone is from the UK, and so it's spelled traveling with 2 L's. So again, traveling.property.investor, and yeah, it's just kind of my way to give back and really spread the word to both my my friends and acquaintances in the U.S., but to my friends across the world also, that there is such an amazing opportunity when it comes to investing in U.S. real estate that I just want to spread the word, and so I've been trying to do that via Instagram. So feel free to add me if you want, or shoot me a message, and happy to have a chat.
Yeah, one question I meant to ask that I forgot just a minute ago, and you made me think of it again. What do your friends think about the fact that you own properties in Memphis and building in Florida, having never lived there or done that? And how did, not only that, but then how did the people in Thailand react whenever you said, "Yeah, I'm going to go over to the embassy and close on properties in the U.S. today"?
Yeah, so I would say there's 2 buckets. There's my friends, and then there's my parents. And so I think most of them are quite risk adverse, if I could define them, and so they always get a hoot out of kind of what I'm doing next. And I think it takes some getting used to. And what's Richard doing next? Oh, he's investing in Florida. Oh, he's living in Singapore. Or he's signing a loan document at the U.S. Embassy in London. And so I think it's quite entertaining to them, but I think they also see the value that it's creating. The opportunity and just kind of the investment returns and what eventually it's going to lead to. I think they're quite interested. And so I've started to have conversations with quite a few friends on kind of getting started as well. And, I've sent quite a few of them your way. And it's just part of the journey.
So what about when you were overseas and said, "I'm going to go close on a property in the U.S.? How'd that part go? And then your parents, you didn't mention what your parents said.
Yeah. So the friends in the U.S. In Singapore, actually, when I closed on the property just recently, some of my friends are American, and they actually invest in the U.S. as well. So they've seen the light, and we kind of tackle it together in terms of brainstorming ideas and whatnot. So it wasn't too surprising to them, but kind of my local Singaporean friends, they thought it was very cool and very interested in what's the whole process? What does this look like? Because the real estate market in Singapore is quite a bit different with government restrictions, and it's very landlocked, small country. So a lot of interest in what is the opportunity in the U.S. and it's kind of it's kind of cool that you have to go to the U.S. Embassy and sign documents and that kind of thing. It makes me seem cooler than I really am, but yeah, just pretty fun. And then my parents as well. I think I've done enough crazy things in my life, like quitting my job and moving to Thailand, and then quitting that and coming back, and then moving to London and then Singapore, that nothing really phases them anymore. But they're quite supportive, and they've seen the benefit of the real estate in Colorado, and just supportive. If it makes sense for me, then they're happy.
All right. Well, fantastic. Well, Richard, thank you so much for joining us today. Really appreciate it. Everybody else, head on over. We will link his Instagram in the show notes as well, but head on over to Rent to Retirement, schedule a time to talk with us. I'd love to do it. You can also see the inventory he was alluding to during the show right there on the site. And don't forget to leave a review for us on whatever podcast platform you use. send an email to podcast@renttoretirement.com with a screenshot of it, and we will send you a $10 Amazon gift card for our appreciation. And also, if you want the top 20 markets to invest in 2023 report that Zach finished up recently, send that over to podcast@renttoretirement, ask for it, and I will make sure that gets sent over to you as soon as possible. That's the top 20 markets to invest in 2023. Really appreciate the time you spend educating yourself today. Talk to you on the next episode.
Thanks for watching the Rent to Retirement YouTube channel. Check out some of our other videos, like this one, or this one here.